Welcome back. Our entire research team is now standing by with the list of the top stocks to watch for the day. And first up, it's over to Abhishek now for Kotak Mahindra Bank. Abhishek.
Well, in the last resort with respect to restrictions being placed by RBI, now RBI has lifted those restrictions on Kotak Mahindra Bank. So, the restrictions that RBI had placed was on 24th of April 2024 with respect to, credit cards as well as digital platforms that's being used by Kotak Mahindra Bank. So, with this restrictions being lifted, Kotak Mahindra Bank can now issue fresh credit cards as well as onboard new customers via online and mobile banking channels. So it augurs two key positive over here. A credit card, they form about 3.7% of the loans, but they are high net interest margin accretive, ROA accretive as well as ROE accretive book. And given the fact that they can now onboard new customers, it also augurs well with respect to deposit momentum gaining pace. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Tell us about Muthoot Finance as well. How are the numbers?
Well, gold really shined very well for them. So, AUM has grown at about 37% YOY and 8% sequentially. YOY is the best growth that you are seeing in last 9 to 10 years for Muthoot Finance. Gold AUM growth is about 34.3% YOY and close to 8% sequentially. The net interest margin has expanded to 11.6% when compared to 10.9% YOY and about 11.5% in the previous quarter. However, their subsidiaries have shown weaker performance. A home finance subsidiary, the net interest margin has declined to 5.04% versus 7.23% in the same quarter last year and about 6.45% in the previous quarter. And MFI sector has been witnessing pain. The management of Muthoot Finance also guided the same, and we are seeing that in Belstar MFI performance, wherein the AUM has declined 1.5% YOY and about close to 9.5% sequentially. With reference to Muthoot's PNL versus our poll, the NI and PAT is a beat on our poll. Expect the stock to gain in trade today. Back to you.
Okay, as I said earlier, 9:50 you'll hear from the manager of Muthoot Finance and Alexander George Muthoot will be with us, joint MD at the company. Sudarshan is now joining in. Bharat, Forge and Endurance Tech should be in focus as well. So good morning.
Good morning, Prashant. So speaking first about Bharat Forge, it was a weak set of earnings. Company has missed. It was a big miss on revenue front. While for margin, favorable product mix has added the margin. That has helped margin, and margin has come at 29.1% versus our expectation of 28.1%. While revenue was down 7%, it has come at 2,100 crore against our expectation of around rupees 2,300 crore. Now talking about the segments, domestic revenue was down both sequentially and year-on-year. Even export revenue was down 2% sequentially and 5% year-on-year. Defense segment, company says lower sales of defense products, and it was again down both sequentially and year-on-year. Talking about the outlook, company says market conditions in North America is expected to improve going forward, but gloomy economic outlook in Europe is likely to weigh on sentiment. Talking about Endurance Technology, it was steady set of earnings. Revenue has increased 9%, EBITDA was higher by 18%, even margin has improved by 100 basis points. It has come in at 12.5% versus 11.5%, supported by the new acquisition that company has made over the last few quarters. That has helped in revenue growth. And second, EV that forms 49% of total order value also has been growing, basically been seeing a healthy growth. So I'm going with red for Bharat Forge and green for Endurance Technology.
Thank you very much for that. Bharat Forge also in the center of the bilateral talks between Modi and Trump, or it will get impacted. We'll have the management of Bharat Forge joining it at 9:40 a.m. today. But it's over to Upasna now for Crompton.
Good morning. Well, the company reported overall in-line set of numbers. Revenue was a bit lower, while PAT and EBITDA margin stood in line with our poll numbers. Now, revenue growth was lower at just about 4% due to lower ECD segment growth, which stood at just about 6% on a YoY basis. And mind you that the ECD segments form nearly about 73% of the company's sales mix, dragging the revenue growth down. Now, after 5 straight quarters of reporting double-digit growth, ECD segment growth moderated to a low mid-single digit as said earlier. Now, lower at A&D spends of down about 16% YoY drove overall margin improvement to nearly about 170 basis points at about 10.6%. Now, moving forward to the numbers first, revenue stood at 1,769 crores with an uptick of 4% on a YoY basis. EBITDA margin saw an expansion of 170 basis points at 10.6%, and PAT saw an uptick of nearly of about 31% on a YoY basis. Talking about the key segments of the company, ECD segment grew 6%, which was mainly led by pumps and small domestic appliances. Lighting segment also maintained its revenue trajectory of 4% on a YoY basis, and green shoots were visible for Butterfly, and companies on track is what they have indicated, as PBIT turned positive at 12.3 crores versus negative 2 crore on a YoY basis. So overall, I expect the stock to open in green today.
Okay, all right, Upasana, thanks a lot for that. Well, in fact, we'll have the management as well of Crompton Greaves Consumer Electricals that will be joining in at around 9:30 a.m. later today. So let's go back to Vivek. He's here to tell us about PTC India as well as NTPC Green. Vivek, how are the numbers?
Good morning. Well, PTC India aided by very robust volume growth. The numbers look quite good. Total volumes up almost 29% on a year-on-year basis. Growth driven by short-term segments, both bilateral as well as the exchange in terms of electricity tradings. Revenues are largely flat on a year-on-year basis, but operationally much better, driven by much lower finance costs. EBITDA higher by 24%. Margin strong, 9.1% versus 7.3%. Profitability higher by 52%. The core margin for the company on a year-on-year basis was a little muted. Q3 coming in at 3.16 paise per unit versus 3.32 paise per unit. Now coming to NTPC Green, both NTPC Green as well as ONGC will remain in focus. A JV between both of these companies has gone ahead and acquired 100% equity stake in a renewable energy platform known as Ayana Renewable Power Private Limited. Ayana, remember, has 4.1 gigawatt of operational as well as under construction capacity of almost 1 gigawatt. What is the valuation at which this particular deal has been done? The enterprise value of the deal is 19,500 crore. So this particular deal has largely been done in line with the replacement cost at which typically a renewable energy asset platform is built. Ayana shareholders include NIIF, the BI South Asia Renewables, British International Investments, CDC Opportunities Fund as well as Eversource Capital. It will be interesting to see how the street takes and reacts to both ONGC as well as NTPC Green on the back of this development.
All right, Vivek, thank you very much for that. So keep an eye out on those names. Natco Pharma and Honasa Consumer are also going to be in focus. Vinny's got those. Vinny, good morning.
Good morning. So in terms of both these companies, we are expecting a red year on the back of their numbers. Now, first, let's go through Natco Pharma. Weak set of numbers reported by the company. Revenue growth seeing a decline of around 37%. Why? Because the Revlimid sales, that has started reducing and that is seeing a major impact. And because of that, margins also have seen a contraction coming in 8.29% versus 35%. So a sharp contraction in terms of margins because Revlimid was a big portion of their sales in the export market and which is seeing a reduction coming in, impacting even the margins of the company. Export formulation sales, they are down by around 53% year-on-year basis and sequentially down 6%. Domestic formulation sales, that is also seeing a reduction of 3% on a year-on-year basis and a 6% sequential decline. API sales and crop health sales, they have seen a bit of a good performance. API sales are up 44% while CHS sales are up 7% on a year-on-year basis. So keep an eye out on Natco Pharma. We are expecting red. While in terms of Honasa Consumer also, we are seeing revenue growth of only 6% that has come in line with what the street was estimating, but the underlying volume growth that has only come in at 1.5%. Now, obviously, last quarter we had seen that loss coming in Q2. Now that has turned into an EBITDA profit this time. But will this sustain? It's still going to be key. Analysts are not too happy with the numbers as of now. Margins contraction is around 200 basis points. 5% is what the EBITDA margin is at. Mamaearth, the main brand of the company, that is seeing a decline in the low single digits as well. So when is the turnaround shaping up? As well as management continues to see pressure in terms of margins in Q4. And that is why we're expecting red on the screen here as well.
Indeed, they're expecting higher advertising and promotion costs in the coming quarter, so which could keep the margins a bit muted. Thank you very much for that, Vinny. It's back to Abhishek now. He's watching all the microfinance lenders. So some small finance banks, what's the latest here?
Yesterday Karnataka CM has tweeted wherein they have mentioned that Karnataka government has signed ordinance to prevent harassment of borrowers by microfinance companies under the pretext of debt collection. So, ordinance will come into effect soon, and then they will protect people against illegal loan collection. Now, it's been categorically mentioned that this may not be followed for RBI based, those who have registered with RBI. So, unlike to impact mostly with respect to listed entities. However, just to alert our viewers, this may lead to potential delay in recoveries. Now, what happens in microfinance is if one customer sees that the other customer is not paying his loan, then they will also begin to default. So, that spiral effect can be seen in the microfinance sector loans that are present in the Karnataka state. A delay in recoveries can keep stress elevated for some of the players like Jana Small Finance Bank, Ujjivan Bank, Equitas, Credit, etc., who have a significant presence in the state of Karnataka. Back to you.
Okay, thank you very much for that. But let's